Fundsupermart.com.
First of all, can you tell us a bit more about the investment philosophy and strategy of the Schroder Asian Equity Yield Fund?
Sure. Well, the Schroder Asian Equity Yield Fund is actually a yield-focused product. But by that, I think a lot of people tend to associate yield with income. But if you look at the investment approach and the process of Schroder Asian Equity Yield, it actually takes a diversified approach to yield investing. So we don't just target the companies that pay high dividends, but we need to ask questions about whether or not those dividends are sustainable, and whether the pattern of those dividends, so are they, for example, is just a steady stream of dividends, or is there growth in terms of earnings and therefore leading to growth in dividends? So by taking a diversified approach, essentially, it provides exposure to the yield strategy or the income strategy, but also, by diversifying, it can actually provide a more stable way of investing into Asia across the market cycle.
Why should investors choose an Asian equity dividend-focused fund?
I think at this point in time, investors are looking for yield. So, if you look at deposit rates, I guess, it does differ across the region, but take Singapore, for example, you're getting very low returns for your cash. So investors are looking for ways to get higher yield. So for Asian equities, I think the story for yield is actually two angles. So firstly, because the fundamentals for the region is strong and there's a longer term growth story in terms of economic growth. So by buying stocks that pay you dividends, not only do you get regular income, but you also gain in terms of capital appreciation over the longer term.
Dividend-focused funds have been rather popular on our platform. What makes the Schroder Asian Equity Yield Fund special?
Actually, the Schroder Asian Equity Yield Fund has been in place since 2002 for the strategy itself. It was launched initially in Hong Kong, and then we launched that onto our global platform in 2004, and we brought it into Singapore in 2005. So for us, it's not so much something thematic that we've just launched recently due to demand, but we believe that such a strategy actually has a long-term place in an investor's portfolio, because if you look at the focus of a yield fund, essentially, for companies that pay dividends, there is a certain bias and a certain tilt towards quality, because in order for them to pay the dividends need to be paid out of cash. So by virtue of the tilt towards quality, the yield strategy, from our perspective, provides a less volatile way of playing the Asian markets due to its quality bias. But also, I think if you look at economic growth, for example, for the region now, how does that get reflected in terms of returns? So if you look at stock markets are not necessarily correlated to economic growth, because stock markets are driven by many other factors as well, including sentiment, including liquidity. However, what we've seen in the past is that earnings growth and dividends is actually much more correlated to the actual economic growth of the region. So, we feel that the yield strategy is a way for us to play that long-term economic growth story of the region.
Are there any specific sectors or countries the fund is particularly positive on?
Yes, so I think from a yield perspective, we talked about it a little bit earlier as well. So in terms of the developed markets, we're seeing more opportunities there from a bottom-up perspective. In terms of corporate governance, those are the markets where we're actually finding more yield ideas. Take, for example, some of the Australian banks, some of the conglomerates in Hong Kong and in Singapore. We do have actually, still a meaningful exposure to the ASEAN markets as well. So it's not to say that we don't favor those markets, but some of the ASEAN markets have actually run up quite a bit this year. So from a valuation perspective, we're just sort of being a bit more disciplined in terms of our approach. But broadly, I think the developed markets continue to offer sort of opportunities for us at this point.
Conversely, are there any investment ideas the fund is not so keen to pursue?
I think for us, the focus is really, sort of two-pronged. So firstly, from a fundamental perspective, whether or not the company is well run, and whether or not the business models are sound, and secondly, in terms of valuations. So I think, from a yield perspective, some of the markets that just structurally, the companies there just pay lower dividends would be markets like Korea, for example. So there tends to be, we're much more selective for that particular market, but also because of the volatility in markets at the moment. So utilities and telcos, for example, some of the more defensive sectors, in terms of valuations, they can be looking rather expensive. So there aren't any particular markets or sectors where we inherently dislike, but really more looking at sort of, you know, what are the current characteristics that are playing through, and sort of sticking close to our approach and our process, and making sure that we stay disciplined in terms of how we go about selecting these names, rather than trying to chase sort of, you know, short-term stories or short-term sort of re-rating valuations.
Thank you.
Thank you.